What's up guys, Nick here from Nick's Taxes, and today I want to talk about the Canada Recovery Benefit and those who are self-employed or freelancers or whatever you want to call yourselves. There has been a lot of questions going on regarding the CRB and for those who are self-employed, especially regarding the income thresholds. Now, when we look at the criteria of who actually is able to apply for the Canada Recovery Benefit and the $38,000 threshold that you can actually earn in the year in which you are receiving the Canada Recovery Benefit, has left a lot of freelancers with some questions, and I'm going to try to answer those to the best of my ability in today's video. So if that applies to you, stay tuned for this video. If you're new to the channel, I'm Nick. I make videos on the Canada Recovery Benefits as well as tax, investing, and personal finance. So if that's of things of interest to you, please hit that subscribe button. If you just hover over the video on the bottom right, there's a little option to subscribe there. And also please feel free to hit that thumbs up button. It lets YouTube know that this is a good video and it will send it out to others who may need this information. So I'd really appreciate you subscribing and liking the video. But without further ado, let's get right into the content. Now, the first thing I want to talk about is regarding the CRB eligibility. And one of the eligibility requirements for the CRB is that you earned at least $5,000 in 2019, 2020, or in the 12 months before the date you apply from any of the following sources. One of them being employment income, the next being maternity and parental benefits from EI, and the next one is self-employment income. And the $5,000 for self-employment income is indeed net self-employment income, so that is your total revenue minus your expenses. Again, the best way to figure out how much you earned last year is to take a look at your 2019 tax return. That's probably the best way. And if you earned over $5,000 in 2019, you will meet this piece of the eligibility criteria. And again, that's your total revenue, like all the income that you're bringing in minus your expenses has to be over $5,000. That would be your taxable income. If you didn't meet that threshold in 2019 and you're looking at the previous 12 months from the application, then you're going to have to do a little bit of bookkeeping. You're going to have to look at the course of the entire 12 months and kind of see how much you earned minus your expenses. And we'll get into some expenses in a little bit later in the video, but the next thing I want to cover is the income threshold for the year in which you are receiving the Canada Recovery Benefits. Canada has put in a new rule with these new Canada Recovery Benefits that's different than the CRB, and that is you're actually allowed to work and earn income during the year in which you're receiving the CRB and also while you are receiving the CRB. So there's actually kind of two rules regarding it. This income earning is actually twofold in the way that you can qualify. And so the first is in the eligibility period that you're receiving the CRB, you've had to have earned no more than 50% of your average weekly income for that period. And so the average weekly income is compared to the previous year. So right now this video is being shot in 2020, so you'd have to look at 2019. Again, another great reason why you should have your 2019 taxes filed, so it's easier to understand and easier for the CRA to make sure that you actually qualify for these. So to understand how much you earned in 2019 should be pretty straightforward. You take your total income, your total net income, right? You take away the expenses again, and you divide it by the number of weeks, and that will be your average weekly income. Now, to figure out how much you earned on a weekly basis for this period might be a little bit more difficult because as self-employed, you incur expenses at different times in the year, and you also earn your revenue at different times in the year. For example, say you're like a piano teacher and you charge, $100 for a lesson, you might receive $400 at the beginning of the month. And so for that week, you may have earned $400, and for the rest of the month, you earned zero. But in reality, you're getting paid that $400 for, say, 4 piano lessons over the course of the entire month. Let's say 1 a week. So what the CRA wants you to do is to report that revenue at the time that it was earned. So if I'm paying you $400 at the beginning of the month for 4 piano lessons, 1 a week, you would report $100 in revenue each week, because that's the time in which you're going to earn that money. We're not looking at the time in which you receive that money. The same thing's going to go with your expenses. So there's a lot of different expense categories, and some of them are a little bit different than others, but within reason, you want to be able to average out your expenses for the entire year and kind of have a good understanding of, what your profit is for your side business, for earning that income that you just reported. So if you work a lot out of your car and you have depreciation on your car, you have vehicle expenses, you might pay $500 for a one-time fix on the car, but that vehicle expense should be averaged out over probably the course of the entire year, because you're using that car for the entire year. Same with depreciation. If you know that you're going to be depreciating, let's say $500 from your vehicle for this year and reported as a business expense, that gets factored in on a weekly basis, and you'd want to divide that by your 52 weeks. So there's a lot of different categories in which you can claim business expenses, and I'll walk through all of them. But when I'm looking at the Canada Revenue Agency website talking about these benefits and qualifying for the week or for the 2-week period, it doesn't go a whole lot into detail regarding the self-employment. So I believe there's going to be some leeway there for those who are self-employed, because it's going to be very hard to prove and to show and to actually know exactly how much you earned for that week when you factor in your expenses, because this 50% again is going to be net. So after you deduct your expenses. It says here right on the website how to calculate the 50% reduction. It says the 50% reduction is based on your average weekly employment or self-employment income from either 2019, 2020, or in the previous 12 months. So it doesn't say, and it doesn't even, when it gives the example, it doesn't give the calculation for self-employment. They don't factor in any sort of expenses. So that's obviously very annoying, because here they are assuming that there weren't any expenses for you guys to take care of when everything else is net. They just put in a easy calculation for you guys to understand. It'd be a lot easier for those who are employed because they can't deduct expenses, but for those who are self-employed who are deducting expenses, that can get complicated. So when you're looking at your expenses, you want to factor in kind of all of these and then average out, how much that would cost per week or per 2-week eligibility period. So the expenses that you can claim on your tax return are as followed: advertising, meals and entertainment, bad debts, insurance, interest and bank charges, business taxes, licenses, memberships, office expenses, office stationery, office supplies, professional fees, management fees, admin fees, rent, repairs and maintenance, salaries, property taxes, travel expenses, utilities, fuel costs, delivery, freight, express, motor vehicle expenses, and depreciation. And then also you're going to factor in your business use of the home if you're actually working out of home. So then you got heat, electricity, insurance, maintenance, mortgage interest, property taxes, and whatever else there may be. So some of these, you're able to kind of figure out on a weekly basis pretty easily. For example, meals and entertainment. Insurance might be one that would be easier as well, because you're probably paying for the full year. You understand what you're going to pay for that year. But some of those you really don't know until the expense actually pops up. So it can be very difficult to report. And that's why I think CRA doesn't really go into detail on the CRB eligibility requirements for that. And I think they do that for for good reason. And so if you're applying in good faith and you believe that you're under that 50% threshold as a small business, you should go ahead and do so. Canada is not trying to penalize you. They're trying to get this money out there to those who need it and for those who are applying in good faith. And if you have any questions, I encourage you guys to call the Canada Revenue Agency and talk to them. They're going to be the ones who ultimately approve or disallow CRB applications. So those are going to be the people you want to talk to. I will put their phone number in the description below for you guys to access. But I think that's probably your best bet. I know there's a lot of waiting times and whatnot right now, but give them a call. They're going to be your best bet if you have any other questions. So that's my video today on small business and CRB. I hope that was insightful for some of you guys and gave you some value. If it did, please hit that thumbs up button again, and I will see you guys in the next video.